Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 30th, 2018. In this video, I want to go over the semiconductor sector. There's been a lot of buzz in the trading room, some inquiries on the semiconductor stocks, and most importantly, I still maintain the view, and I've said this for a while now, but I still maintain this view that I believe the semis are setting up to offer one of the most lucrative shorting opportunities of any sector out there in the coming, let's say, 1 to 2 years. So the timing, we got to get the timing right. We've taken a shot at, we had a recent successful trade. Well, it depends how you look at it. I'll get into that trade in a second on SOXX, SOXX. But this is what I'm going to use as my proxy for the semiconductor sector. I like it for a couple reasons. The semiconductors, the PHLX SOXX semiconductor index has been around forever. It was the original semiconductor sector or index, and this ETF tracks that. So you can go back, look at long-term charts on the SOXX, the sector itself. This is the ETF. It's going to mirror the sector. And we also have two other options available for you, those of you that like to trade the leverage ETFs. We have SOXL, the three-time long semiconductor bullish, and SOXS, the three-time short. I'm going to get to that in a second. When to use those, when not to use those. I know there's a lot of controversy with leverage ETFs. So before we get into this weekly chart, and what I plan to do in this video, I'm going to just touch on the daily chart real quick on SOXX, because that's the sector itself, or at least the ETF that tracks the sector. And then I'll move through and we'll look at some of just the top components, some of the leading semiconductor stocks. Time permitting, I'll go through all. There's about 30 components in SOXX, 30 stocks. But to try to paint the bigger picture, we'll focus only on the weekly charts, and we'll look at those leading stocks, and then I'll, some of these may be actionable trade ideas right now, and that's another reason for doing this video. All right, so let's take a look at the daily chart real quick before I move on. I have several different boards, several different drawings, but the bigger picture is this. So if you look at SOXX, we're back on a daily chart. Oh no, this is a 2-day period. I'm sorry. That's every candlestick represents 2 days of trading. But you can see a nice trend line off the 2015, early 2016 lows. Very well defined, very well defined. I have to tighten it up on this chart because I had it on the daily chart. This culminated in a divergent high. We had a divergent high right here, and we shorted right off that divergent high there, covered right at the lows there. That was the first target was hit. I had additional targets on the trade. I'll try to show you those if I have them on another board, but I did mention covering going long, the semis there being bullish. Then that trade went on to just have our stops run. Again, we'll get to it in a second, but just from a pure charting perspective, I see a sector that has already broken down below trend after a divergent high, 2 consecutive divergent highs, and this appears to be a kickback rally right now. Now, the thing about kickback rallies and trendline breaks is they can certainly, continue to go up. Maybe it wants to make another test at this back test of the trend line, and maybe in doing so, if it did so, it would probably extend these divergent highs. So this is what I'm trying to say. The timing isn't there yet. Not for another official trade on the semis. If you want to take a pot shot at it with a stop not too far below, you may catch a runner trade, a trade with a lot of downside potential if the semis suddenly reverse. But right now, we don't really have anything remotely close to a sell signal on the daily time frame or the weekly time frame for that matter. And I can't rule out that the semis continue to go on and maybe in the coming weeks, possibly months, put in another high, which would almost certainly, as you can see here, still be another divergent high. And then the other big level I'm watching are the recent lows right here. It's about 164.50, give or take. You can see that that has contained all pullbacks since late 2017, including both the corrections so far this year in 2018. That is a very important level. Now, it's quite a bit of hot air down, beneath current prices in that level. So ideally, I'd like to get a short in here soon, swing down to that level, and then hold for either, game a quick bounce off it or hold for a breakdown. But I just wanted to mention these are the important levels that I'm watching. And let's just show you if I have any other boards to share here. That's it. I can show. There's the official trade. First target was hit right here. We bounced up, had the stop run by just a hair for 1 day, I think, and then reversed back down, tested that level again. So that's, again, this is the near-term picture, but you can see green candles. We don't really have any sell signals yet. Let's go back to that weekly chart and then try to wrap this video up. All right. So Semiconductors, like everything in the financial markets, they work in cycles. You can view those cycles like waves, and it's like waves in the ocean. If you live, well, you've been to the ocean, I'm sure most people have. The waves are never the same. Some days it's very windy, there's big waves, frequency is different, the amplitude of the waves, everything can change. So the same thing with semiconductors. These cycles work where typically at the end of a cycle, back here in late 2008, 2009, we were at the end of the bear market. There is then a shortage of chips. The semiconductor companies start, cutting back on production, cutting back on inventory, and that's what starts a bull run. And bull runs are usually they culminate with a surplus of chips on the market, excess supply, demand starts to slow, and then chip prices crash. So this is why I like trading this sector more so than a lot of other sectors in the markets. The gains, whether you're long or short, come very swift. There's a 28% drop following this divergent high. You can see I have the divergent highs marked here on the charts. Negative divergence. We had a divergent high there, 18% drop. We had a divergent high there, 28% drop. We have a divergent high here after an extremely extended run. This was one of the most powerful runs in years, comparable to this run back here. However, please keep this in mind. We're looking at a chart right now, a 10-year chart going back to the bear market lows in the semis, which actually bottomed before the rest of the market. Most of the markets bottomed in March 2009. Semis, like the Nasdaq 100, bottomed a little earlier, back in November. Either way, that was the bottom. My point here is you're looking at we're coming up on the longest bull market in history of the financial markets. We all know that simple statistics and probability tell you this is not going to continue forever. We are going to have a bear market, and due to the excesses in this market, it's probably going to be ugly. So my point that I'm trying to impress here is these are not bear markets. I know typically the definition of bear market is a drop of 20% or more. These are just corrections within a bull market. I want to point that out. So when this starts to play out, I strongly believe we're looking at a drop much more than these 20 to 30% quote unquote corrections within this larger bull market. We're probably looking at a move, if you want to know where I think we're going before all is said and done, minimum in SOXX in the semis, about a 45% drop from where we are now. So yes, we go up another 5%, then I'm looking at a 50% drop. I wouldn't be surprised to see the semis before all said and done within the next couple of years be down here, SOXX down around the $75 level. That's a 60% drop. And remember, again, stocks tend to fall a lot faster than they rise, and that's why I'm doing this video, so you can get your ducks in a row. Whether you're a long side only investor and you've been riding this wave up, congrats to you, but you want to know when to pull the plug, just keep in mind when the tide shifts, you're going to see most likely a very swift drop. And we're already below trend. Again, I cannot emphasize that enough. The sector itself has broken trend line. This is that same trend line I just showed you on the daily chart, or the bi-daily chart there. Rising wedge, negative divergence. So we could roll over any day now, and I can't rule out the possibility of another new high, and we're not that far from it, especially relatively speaking. I think we're 5% off the highs in SOXX. So another 5%, we make a new high. It will be another divergent high, and it'll probably be another back test of this trend line from below as well. And maybe at that time, that might be the next official short trade idea. All right, so now real quickly, your options to trade are SOXL if you want to leverage up. 3-time bull, and of course the short. Now the benefit of trading SOXX, I like that because it tracks the same sector as these two do, SOXS and XOSL. They both track that Philex SOXX semiconductor index. Now what I wanted to point out, sorry I'm jumping all over the place here, SOXX. Okay, I measured this move down to the penny here, 28.43% drop. So about a 28.5% drop right off the mid 2015 highs in SOXX. This is the point I'm trying to impress. There's so much negative publicity and bad press about these leverage ETFs, how awful they are, especially if you hold them for more than just a day trade. And I've written about this extensively over the years. You can find up my detailed response in the FAQ page on the right side of the chart. that those ETFs, yes, typically make awful buy and hold vehicles, especially if you get caught in one of these sideways trading ranges. I can tell you emphatically, you do not want to hold a leverage ETF for multiple months, whether it's long or short, during a sideways grind like this. You will lose money. It is all but certain. It's in the math. And again, visit the FAQ page and it will explain that. However, you do want to hold them if you can catch a unidirectional move because, for example, right here, 28.43% drop from the mid 2015 highs to the lows, and we look at SOXS. And again, I've listed many examples on the site over the years. Right here, there's that same move, and instead of a gain of, let's see, so SOXX dropped 28.43%, multiply that by 3 for the 300% leverage, and you would expect that SOXS went up 85.29%. However, SOXS went up 143%, nearly double what you would have expected. Or in other words, it went up over 500% instead of 300%. That is because this is what I call a fairly unidirectional move with a lot of green candles, meaning the semis were dropping with very few counter trend rallies. These are the times you want to hold this thing. Likewise, and it works the other way if you're trading SOXL, but you need the sidestep. You have to get the timing right on it or you will lose money due to the decay. So that's that. Now let's just roll into the charts and we'll wrap this video up. I will not cover them all unless time permits. We're doing good. We're only 11 minutes into this video. I'm going to spend a little more time on the top components. Again, time permitting, I'll get to some of the smaller ones. We don't have to cover them all, and I'll show you why. This is directly off iShares website. This shows you the top 10 holdings within SOXX, which again is also the same as those inverse three-time long and short ETFs. So you can see right here the weighting for each one. There's your usual suspects: Intel, the 800-pound gorilla, NVIDIA, Texas Instruments, blah, 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 all of them. Cumulatively, this adds up to 61.85%. So nearly 1/3 of what SOXX is going to do, 1/3 of the performance will be attributed to just these 10 stocks, at least the way it stands right now. So we're going to spend a little time on those charts, look at the top components, and then maybe I'll breeze through the other ones because they may offer good trade ideas, but they're not. You get down to the lower ones and they're 1% or less weighting. It's not going to have as much of an impact on the ETF. But by looking at the bigger picture of not just SOXX, but looking at what these individual semis are doing, this is going to tell us when these stocks are most likely in a bear market and when it's time to get in and start to aggressively short the sector. All right, let's get back to the charts. So we know Intel is the 800-pound gorilla in the room. This chart, it just speaks volumes to me. Again, it talks about the cyclicality of the semiconductor sector. You have these uptrends followed by corrections, and those uptrends are usually defined. You can add trend lines in almost all cases. Not always. You can't always put a excellent trend line, so sometimes I won't draw them. But what is one of the common traits? You have these divergent highs. You can see right here, negative divergence at that point. 28% correction. We pushed on up. We made another divergent high here. You can see the negative divergence again. The price is making higher highs. The momentum indicator is making lower highs. 34% drop. So 28%, 34%, 34%, 14%. And again, these were only corrections within a bull market on Intel. You can call them bear markets if you want, but you look at the larger trend, it's been up. Now, where are we at? This to me looks like a couple things. It's certainly, and I think one couldn't argue that, is a rising wedge pattern. It's very clear. You have it confirmed with negative divergence. You have extreme overbought readings. The last time we were this overbought was back here at this point in time. That was followed by a 34% drop. So you have a bearish rising wedge confirmed with divergences. It also looks like a blow off top, very steep advance. At bare minimum, I'm looking, these are my targets right here. 32% drop before all is said and done in Intel. And again, that would only constitute a run-of-the-mill bull market correction. So there's a potential for more downside, but let's just keep it simple right now. These are the levels. These are my price targets for Intel. Sell signal to come on an impulsive break and or especially a weekly close below that trend line. Chart doesn't get any better looking to me than that, and nor will a sell signal when I see a big red candle smash through here, especially a big red weekly close below this trend line. That will most likely mean the semis are now clearly underway in a bear market. Taiwan Semi has already given up the ghost. You can see a very well-defined trend line, this yellow trend line. We broke down. The fact that we followed that breakdown with a big red impulsive candle helps to confirm the validity of that trend line, meaning it's a well-watched technical level. You can see the sellers exited the stock once that trend line is broken. This stock has since been consolidating. Looks like sort of bear flagging action right there. There's your flagpole. This one looks bearish to me. So there's one of the leading semis that has already broken down, at least on the technical perspective. I don't see any reason to step in and go long this stock. The PPO is still above at least the signal line. The 9 EMA is still above the zero line, but this one looks pretty bad. I wouldn't even be interested at least till that RSI gets down to the 30 level on the long side. But again, but keep in mind, guys, I'm not going over the daily charts. I might see something a little different on the daily chart if I were to study that. So if you're a member of the site, gold member, and you want a chart opinion on any of these stocks, a more detailed chart, price targets, etc., drop me a line in the trading room. Best to do it in the trading room so other people can see the chart. They might have the same questions, or even if they don't, they can benefit from that. So that's my preferred method of contact for chart opinions. NVIDIA, nice, well-defined uptrend line. This one has not received the memo that the cryptocurrency bubble has burst. NVIDIA and AMD are your two big GPU makers, graphic processing units, aka video cards. That's what the crypto miners use, or one of the things they use, to mine Bitcoin and Ether and all those other cyber currencies. And so that was a large propellant right here for this rise in NVIDIA, where they're, the graphic card sales, the profit margins, the high prices they've been commanding. But clearly, you can look anybody. I don't care how bullish you are on cyber currencies, and I'll trade it long and short. But nobody can argue when you look at a long-term chart of any of the cryptocurrencies that it was not a bubble, A, and that B, that bubble hasn't popped. It was a parabolic run-up. Prices have collapsed since, so that bubble's popped, but NVIDIA hasn't gotten the memo. Obviously, you can see the negative divergence, but technically the stock's breaking down. It's below trend, and sometimes this happens. I talk about this a lot. Sometimes you break a trend line, and that's it, and that's all it takes. And then you sell off impulsively. And sometimes you have a kickback rally. In other words, after you break trend, you have an initial leg down, and then you go up and you take out the previous highs. If you do it with a divergent high, there's still a very high chance that that is just an initial kickback rally and that this chart will play out and continue on down like that. And that would be this is my target zone for NVIDIA right here. Minor squiggles aside, however it's going to get down there, 113 to 95-ish. And, that's a big drop. If we get there, that's about a 54% drop, 62 down, 61 to the bottom of the zone. There's no guarantees in trading, but I see that as a close to a near certain over the next year to two. And again, you can't just, it's tough because even this little sideways chop here, the ranges are pretty high. That's a 24% rally off this low right here. So timing is everything on these stocks, unless you're using very small position sizes. But it's best to just wait, maybe miss the top. Wait for some decent evidence of a reversal. Right now, I don't see anything on this chart that tells me that we have a sell signal in NVIDIA yet. We have divergences that do warn of an impending trend change, but I don't see any sell signals at this point in time. Other than, the fact we broke trend, we have a kickback rally, but I need to see a sell signal off this most recent rally, and I need to do that by looking at the daily charts, 60-minute charts, etc. Moving on, Texas Instruments still above trend. What I've done here, let me move that line. We're still above trend, and this is part of doing this video. Why I'm doing this video, I should say, is that some of these leading stocks have not yet broken trend, and therefore that's why the semis are holding up, and they're still not up far. They're only about 5-6% off their highs. We need to see the sector break. If you did this, if you went through, follow this video, replicate these trend lines on your own charts, use log scaling. Very important to use log scaling, especially on these weekly time frames. Gives you a different story. This is arithmetic scaling, completely different technical picture. This is log scaling. And if you set trend line alerts on all these stocks, My guess is you'll have half dozen or more of these alerts going off on the same week, probably within the same day or two, once the semis roll over. And once I've seen the vast majority of these leading stocks break trend, then I think it's safe to say that the bull market is over, and we're in the early stages of a new bear market in the semis. Until then, I cannot rule out another thrust high. A lot of these stocks look to be, I see a bearish crossover in the works here. I'm sorry, a bullish crossover on the PPO. So I can certainly see another little thrust up, 5, 6, 8, 10% higher, 12, put in a second divergent, or I'm sorry, put in a divergent high, because this one didn't have, like a lot of the others, a divergent high. You can see I drew the lines there, gave it a little room, then break down. So, like I said, this is a sector that I believe is setting up for a great move. You just have to be patient. That's all. And if you're patient and you get the timing right on this, and maybe add to your positions as the evidence continues to firm up that these stocks have now broken down, I think they'll make for a great swing trading op. All right, let's move through the rest a little bit quicker since it's much of the same. This is AVGO Broadcom, still above trend. It had a divergent high. I don't have all these divergent highs drawn out, but this is the common theme here. Most of these stocks recently put in a divergent high on the weekly time frame here. You can look at the big divergence there, or you can look at that more recent divergence. And so to me, it's a matter of time before that trend line breaks. Qualcomm, this one topped way back here in 2014, dropped to about 70%, I think. 50% drop in Qualcomm. It's still a huge drop. Big gap right here to contend with right now. Last time I was, put a trade idea on it was on a back test of one of these back tests of this trend line here. This one maybe it went a little lower and then panned out afterwards. But there's a big gap right here. This is what I'm looking at, and a lot of reactions on the bottom of that gap. And so far, that's where Qualcomm failed. So it's had a heck of a run up to challenge that gap, but so far it has failed to try to get in that gap. If it does get in, maybe it wants to backfill it, but you can see this is this week's candle, still below after trying to get into the gap, it's back below it. NXPI, as I go down the line here, these are smaller and smaller components. Don't really have anything drawn up on this chart. ADI, Analog Devices, nice bearish rising wedge, confirming negative divergence, breakdown, back test. MCHP, Microchip Technology, breakdown, backtest, sharp, rejection off that backtest, followed by another push up. But we'll see what it's doing here, like so many of these stocks. They're continuing to diverge. These aren't separate divergences. I mean, they are each one themselves, and they did play out for a double-digit or high single-digit pullback, but they are an extension of the same divergence. This is a negative divergence. These same divergence on these momentum indicators making lower lows while prices make higher highs, and this is a bearish chart. It's just a matter of time before those divergences finally pan out. STM, again, we're getting down into the smaller names, so I'm just going to rifle through these charts. You can look at my annotations, and again, if you're in any of these stocks or interested in them, let me know, and I'll be more than glad to put up detailed coverage or a chart with some price targets. So there's Xilinx. I was looking for MU because I put up a chart of MU in the trading room today. I want to find that one. It might not be in this ETF here. There's Maxim real quick. AMD, another one of the big GPU makers, and chips. They make chips as well. Divergent high at this point right here. We had negative divergence panned out so far. We also have this sort of a descending price channel. We're at the top of that channel now, and there's still resistance overhead if it manages to punch on through there. And like everything else, if it does happen to make a new high, it would take probably a few weeks to months to get there. It will be an extension of the existing divergences that were already in place at that most recent high. Marvel Technology dancing the line right now, right on trend line support. Big gap down below. Once that gap goes, that one will be a high probability sell signal, and probably get a sell signal on the break of the trend line as well. But again, I'd want to confirm it with the daily charts. ON on semiconductor, sending price channel, negative divergence at the highs recently. MSCC, micro semi, negative divergence, little minor trend line to watch there for a break. UMC, SMI. All right, these are little smaller names. There's Cypress Semi. Let me just pull up, there's Manpower, I'm sorry, Monolithic Power Systems. Here's a divergent high on that one as well. I should have marked up, and I'll get to MU and then we'll wrap it up here since we had a couple inquiries on MU lately. Beautiful looking chart. Posted this again in the trading room today. You can see back here we had a divergent high in 2011, early 2011, followed by a 67% drop. Divergent high 1, 18% drop. Divergent high 2, which was followed by a 74% drop. So again, now we're at the tail end of what's almost most people agree, getting in the late stages of a bull market. So if the next bear market comes, I expect a lot more than just a 28% drop. That's my minimum target. This is my current preferred target, about a 60% drop off the current levels. Now, what I've done with these lines here, it's already put in a second divergent high right now, but we don't have that divergence confirmed. If you look closely, the PPOs just crossed bullish, pointing up. So again, this stock, like a lot of these semis, could push a little higher. They could roll over tomorrow, literally, or they could roll over a month or two from now. And if they do, you're going to have another divergent high in that one, and then watch for a break of this trend line. And again, those are the targets. All right, let's wrap it up here. This has been Randy Finney with the right side of the chart. Hope you enjoyed it. And as always, if you did, please give it a thumbs up on YouTube. Much appreciated. And if you guys have any questions on any of these stocks or any other semis I didn't cover, again, drop me a line in the trading room.